This is Rod Kusin, Spooman for Risk on October 20th, 2009. We're going to take a minute here and talk to you a little bit about one of the forms of divergence that we have been tracking on the tick. We've talked to you about this in the past, but I'd like to just show you how well this worked today and let you know that we have now programmed this into a strategy, so that what we're showing to you manually can happen automatically. First off, what we have before us is two charts. One is the 700 tick bar ES chart with a 20 tick bar tick symbol, $TICK, that is plotting our group reversal system. Now, take a look here at this bar. All right, we've tried to line up these two charts. The Spoos have been moving down. All right, they moved down to this point in time. Now, when the market is in a trend, all right, when it's in a trend, and you want to take a counter trend trade, look for what we refer to as a type 3 divergence in the indicator. And a type 3 divergence, if the market is shorting and you're looking to take a long trade, what you want to see is the tick to have a higher low at the same time you're hitting a lower low on the Spoos. So, as we're moving down into a lower low on the ES in here, we're tracking what's happening to the tick. And as we get into these lows right in here, all right, notice that the tick itself is becoming divergent. It's becoming divergent. We now should be poised for a long trade. Right in here. Lower lows on the Spoos, higher lows on the tick, and strength entering into the market, as evident by our color bar system. Now, if you don't know our color bar system, just go to the section on our website referring to group reversals, and you can read all about that. But we have a reversal in here, and we have strength growing. And notice what happens. Here we're at a low at around 1055, let's just call it there, and we run way all the way up to 1061. Nice move. Now, what about taking the trade at the top? What do we look for on the tick? We look for a loss of strength, in other words, weakness on the tick as it moves up. We want a weak colored bar. What do we have here at the top? Okay, now we just showed you. See where these two vertical lines line up? That lines up with this bar here or here on the tick. Now, white is still a positive color, but yellow is negative. Yellow is negative. Now, that happens down here. But right in here, we have divergence. We have some divergence. We've had a loss of strength, which even gets more so on the next bar. Time to get out of that trade. Now, let's wait until the ES drops below the adaptive price zone. Again, if you don't know about that, we'll talk about it another time, but this is an ADP, an adaptive price zone indicator. We don't trade that until it gets in between these two lower bands. So right in here, okay, we're looking at a possibility of a trade, but what do we need? To counter trend trade, we need to see divergence. And here's the low. We don't see divergence. but we do see it here. Now it's as plain as day. You've got a new low on the S&P. You're at a higher low, much higher low. Look at that. That's this bar right here. Much higher low on the tick. Time to go long. Boom, up she goes. Isn't that something? So now up we go, and let's notice how this lines up. We start getting here, we're at a new high, but we're at a new high on the tick, and there's no loss of strength. We're at another new high. Okay? Now what do you see? That corresponds to this bar on the tick. It's weak. Okay? Right there. You're almost at a new high. You get a weak bar. The next bar up, however, now, we're at a new high and we're strong. The next bar is weak. So this might give you a little bit of a question in your mind. Should you take the trade? You might take it. Nothing was hurt if you did. But look at what happens when that price is tagged right over here. Now what's happened? All right, 59.25, 59. Actually, it's just a little higher here. But what do you see happen on the tick? You're weak. You get a big weak color here. That's a red. That's a -4. Down it comes. All right, where do we get out? Do we get out here? Let's line this up. No. We're at a new low, relatively speaking, but a lower low on the tick. We're not divergent. Again, we're trading with the trend here. We've got to be divergent. Here we're divergent. All right, we may decide to take a long trade here. This will ultimately get stopped out. So now as we go back down, we look here. We're not divergent. Let's move this forward a little bit more. Try to line that up. What about in here? Are we divergent? Here. Now we're divergent. And we have a strong bar. Now the next bar turns out to be a negative bar, but we're saved by the bell. Because even if you had put a stop in there, you probably would not have been stopped out, nor would you have elected to exit the trade because you're already seeing some profits. Where are we going to get out of this trade? We wait until it gets back up into the bands. Here. All right, here. This is a potential good time to take a short trade. Now it doesn't pan out quite as well, but watch. Even if you got into a short trade here, you have plenty of time to tighten your stop. Now you come back. Okay. Come back here, right in here, and what do we see? We're at a new high, just barely into the bands. That corresponds with this new high on the tick. So we're not really ready to trade. Not yet. But really, by the time we hit the very next bar, which is just a quarter of a point off, just a quarter of a point, we're negative. And good reason, again, to take a short trade. So I think by now you can see the potential here. Now we call this a divergent, type 3 divergence. So look for future videos on this subject in our strategy as we show you how the new program turns out in the tick strategy with RSKsys.com. This is Rod Kusanen for Risk.